Hi everyone, and welcome to another quick take video. Today we are looking at Wesfarmers. So for those who live in Australia, you may know Wesfarmers through some of their iconic brands such as Bunnings Warehouse or Office Work. So they own both of those. They also do mining and a few other things that is not as well known, but Bunnings is definitely one of the iconic Australian brand sausage and on a Sunday, sausage sizzle on a Sunday. So that's what that's what I know Bunnings for. I actually worked for Bunnings for almost 10 years, started at 15, and it's a great company to work at. And speaking from experience, saying like it's a great company to work at, it also shows that it has. From my point of view, it has a lot of potential to keep growing and growing, especially during the pandemic. Bunnings actually one of those few businesses actually got busier because a lot of people were stuck at home, especially in Victoria. So they ordered products online at Bunnings and do a lot of home renovation. So they're actually a force to be reckoned with. So anyway, so that's a little bit about the about Wesfarmers. So it does a few things, notably mining and retails. Okay, so let's go straight into the ratios. Give it a few seconds. Okay, P ratio is 37. That's not bad, especially for such a big company. It's actually sitting there quite nicely. Going straight down to quick ratio. Quick ratio has got a lot of cash, and most likely because of the mining component of the business. So it's something you want to look into. Dividend yield 2.85, which is really fantastic. Again, considering the current financial climate that we're in. Yeah, so moving right along into cash flow, and Bunnings been around. Wesfarmers been around for a while, so it's going to be a significant amount of data that we're going to look at and go through. Operating activity, look at that, doubled, fantastic. What about investing activity? Also, it doubled. So other investing activity, cash flow items. So maybe they cashing out of certain investments. So we have to look into that. Maybe they planning other, their investments are paying back. So it's something that we want to look into. So dividend paid. So paying dividend and paying back debt. Wow, paying back significant amount of debt, which is again really fantastic. Look at that, a huge amount in cash. What's that? Almost 20 times. But remember, something happened here. But if you look through the cash flow items, it's been pretty consistent. So it seems to be coming from the operating activities. Again, a really good sign that this company is doing well. Okay, going straight to the balance sheet. So balance sheet, let's go annual. Current asset, let me see if I can, see. All right, current asset increased, cash decreased a little bit, cash equivalents gone up. Okay, fantastic. So it has a lot of properties, there's so many Bunnings warehouses around, and those warehouses are huge. And in Victoria, there's about 3 double-story warehouses. So imagine like the size of a football field, and stacked on top of each other. If you're from overseas, you've never been to Bunnings before, and you come to Australia, anytime in the future, I recommend just checking out one of these huge warehouse, and comment down below to see, just so I can know what's the equivalent in your country is to Bunnings. Liabilities, long-term debt gone up. Possibly it's expanding, and as Australia expand, like the residential expand, not just Bunnings. I'm keep talking about Bunnings. I'm talking Wesfarmers. Anyways, Bunnings in position itself really well in terms of it's in the home renovation. It's also in the office. So it owns Office Works and I think Kmart also. So it's really catering for the consumer market. So it's and it's something in some ways kind of essential because again, one, Bunnings is for like tradies. Australia is almost, let's say, built on the trades, and Bunnings really cater for them, and I think that's where it really excel beyond its competitors like Mike the 10. Pi the 10 really got nothing on Bunnings. Like I can really confidently say that Bunnings has like the monopoly over every other competitors. Mike the 10, Home Hardware got nothing on Bunnings, and Office Works again it has the same kind of branding. It's like lowest prices guarantee, beat any lower price by 10%. So it really appeals to the customers, and they make it really easy to kind of interact with them. So I keep talking about Bunnings. It's Wesfarmers, right? Anyways, but yeah, it just shows like from my perspective, because Wesfarmers owns Bunnings, and I also enjoy Office Work. It just shows that they know what they're doing, and I think it's an insight that I can really offer. All right, moving right along to maybe the income statement. Oakley dokley. Look, I don't talk about the mining side much because I don't really know much about the mining side. But again, this is a quick take video. We're looking at what we can find in less than 20 minutes. Going straight to the net income. Net income dropped a little bit, so we want to find out why. So revenue gone up. Gross profit is fine. Operating expenses gone up. So with expenses, operating income. So operating income gone down. It seems like the depreciation and amortization gone up. Net income before tax. So it's similar. Tax. So what is eating away? Extraordinary item, net income. What is eating away? What is going on? What is eating away? I don't feel like there's sufficient. It doesn't look like there's information. That's one other thing I find about investing. It seems like it's missing information here and there. Anyway, net income here gone up to 5,000. I just want to compare quickly why this is 5,000, and we're talking about 5,000 million, which is $5 billion. It's a huge company. It's almost. I reckon it is considered as a blue chip company. It's a very safe investment in some ways. Why is it so expensive? I mean, why is the income so high here? Revenue lower, and then total expenses. Let's just collapse this. Let's have a look. Operating income. Then cost of tax, and then extraordinary items, and then what's this? Total extraordinary item. Did I add these together? So so we want to find out what's these total extraordinary items is, and what is it that pulling in all of this cash? The 3 billion. It would be 3 billion, wouldn't it? Yeah. But if you just remove the extraordinary item, you can see that it's actually the net income actually increases, except for this 2017. 2017 looks really good. So, yeah. Look, it's not doing badly for itself. Let's say it's definitely higher in 2018 than 2018. It's this 2019 that has these extraordinary items. Yeah, all right. So it's a really good looking company from the financial perspective, and from my insight, it's a really well run company, at least the Bunnings side of it is. And I believe that the office work side would be very similar. So this is the chart, and you can see it's jump up and down a little bit. It's not totally in mining. So with mining companies, you get a more of a cyclical kind of pan, but you don't see it here just because it's not just in mining, and it's in a lot of things. But it's definitely, the price has been rising. It seems like it's plateaued a little bit around this part for what's almost 7 years. So and I guess that's the cyclical part that you can see up and down, but overall, what I started working when I was 15, so 2016. If I kept it there, that's around 27, I would have doubled. But I wasn't very financial savvy then, and I sold it to get the money. All right, well, it was rising really well, and then it dipped during the pandemic, but it really bounced back. If you bought it here, you would have doubled. Look at that, $30 went up to $54. So fantastic company, really. But let's have a look at any opportunity. Would I invest? Yes, I would. Pay dividends, really solid company. But would I invest now is the question. Let me just put up the MACD maybe, and then let's have a look. Financial, no, it's not financial, it's indicator, and let's move up the MACD. Thank you. All right, so from the look of it, so it's probably a little bit, it's rising. Fantastic for those bought it lower. For this kind of company, I would wait for it to dip. I probably can do a little bit momentum trade here. But I feel like it's going to retrace a little bit. Let's bring out the how come it doesn't work, this hotkey? Okie dokie, come on buddy, you're embarrassing me in front of my viewers. Okie dokie, let's bring that out and pull that up there, and bam. Okie dokie, so that tip there just gone really at this point here. It touches just right at the 78% mark, so I'm expecting it to just probably drop down to there. If it dropped down to there, I'll probably go in. Again, it's more of a cash flow issue where I'm going so low, like $5,000, not $2,000. But yeah, it's a solid company, looks good. So I would drop here. I wouldn't buy here. It's just a little bit too overpriced. I think there's a hype going on. You can see the volume exceeded there and drop down. So it seems like this one here is because people saw this one and said like, oh shit, let's push it up a little bit more. There's a doji, and it's just, some people say that's signal of a turning point. So say what you like about that. It's hard to kind of say how the stock is doing from just one kind of indicator, but from the MACD, it looks like it could be going up on a trend like this. And I guess we can draw a trend line and have a look at it too. Trend line, let's see there, and let's draw one around. No, yeah, and this is high as it's ever been, so I don't have anything to kind of go off on. Maybe draw this one here like that. So it looks like, yeah, it just looks like it's hit top of that, and it probably bounce back and go according to this. So yeah, anyways, that's my quick take on Wesfarmers Limited. So if you like what you see, comment down below, like and subscribe, share this video. If you have any other opinions, comments about what my analysis or about this company or any other company, do so in a civil manner. And if you want to check out any other videos I have, on other companies, please do so. Welcome to do so. Other than that, have a great day.